Hey everybody, how are you doing? Let's hope you can hear me. Give me a couple on the audio side to tell me that you can hear me nice and loud and clear. Glad to be with you, and we have got an interesting week right now. We have a very interesting week. I'm checking the channel over here to make sure I'm showing when I should be showing you. We've got the rates up on the long end. We have the rates up on the long end. You know that thing we keep on telling you about? That's so important. The rates are up on the long end. I'm going to go to share screen. Let's see if we can do it this time. And we will go entire screen share, and we will go and have a look at rates. Yes. So what do we got? Here we go. United Kingdom. Let's start with the good old United Kingdom, where they're arresting people for having a flag. It's very offensive to have your national flag, by the way. You're clearly a far-right racist, and you should be arrested. And also arresting people for honking at crowds, carrying white flags. So actually using your horn in your motor vehicle is also a problem. They want to take your name. So there you go. That's two-tier policing in the United Kingdom, and this is their debt markets at the moment. So let's have a look and have a see how the hell that's working. Well, a gap open. We had another. This is, by the way, the 12 hourly on the 30-year. So let's just have a look at this. The 12 hourly on a 30-year. We've told you that this is going higher a number of times. We've continued to reiterate higher. You've just got yourself another squeezy. You've got a gap open there. You've just had another gap open there. So you've just had two gaps on interest rates. By the way, it shouldn't be such a gappy chart. You're told that it's the most largest market cap market in the world, but where's the liquidity for all that market cap? There should be millions of people queuing up to buy bonds when you want to sell. There should be a permanent stack of hungry buyers for UK gilts waiting to accumulate everything you have to sell. Scarcity and all. You know that scarcity, those black holes that are being filled with scarcity paper. That kind of scarcity, you know, the noticing variety, which is almost antiseptic to notice. Yes, so here you are at 5.689, you've got a 5.875 to come to the high side. To the high side, 5.875, that's on the 30-year. This is a small time frame setup. On the 20-year, there's even bigger. We've pointed out that you're going through sevens. So at the same moment that we're in a breakout on gold and silver, we'll be coming to that, you have debt-based money going down in value, up in yield on the long end. And as they'll tell you, the first person to tell you that on Zero Hedge just a few weeks ago, was whoever it was saying, hey, they're substituting, the debt market's turned and they're substituting the long end of debt instruments for gold. Well, it seems quite true, doesn't it? That guy on Zero Hedge gave you the trade. There you go. You just needed to be watching Zero Hedge a couple of 4 weeks ago, and you'd have been told that debt down. You'd have been told during tariff tantrum by somebody possibly that actually rates can go up and dollar can go down and gold goes up. In other words, everything you were told about gold going down on higher interest rates no longer holds, because you are actually facing a reserve asset substitution. That had someone known that in 2020 that the trend had changed way back then, you know, had someone known, you could have been short debt and you could have been getting very aggressively long gold for times just like these, for example, and not waiting for a 40% discount. Not waiting for a 40% discount. Yes, you know who you are. Not waiting for a 40% discount. By the way, that 40% discount was mooted when it was still in the $800. That idea was put forward by its friends that like to put that idea forward, and we should have had a collapse to 800, upper 800s, 890s in dollars for gold. I'm not waiting for that, by the way. That would take, while we sit at 3,500 at gold, that would take a 75-80% haircut now to get $800 while you're sitting at 3,500. So don't be shaken out. You see, I'm actually messianic in wanting to keep it simple and keep the people making the money. And I always fear, and I'm called an obnoxious person, a rude person, an arrogant person, a mega egoed person. for asking and interrupting and bringing into question when people start to say certain things that sound like an incomplete understanding. And I get frustrated and I get belligerent and I do all sorts of things. And I'm told Francie bad, Francie rude, Francie shouldn't play. He should be kept out of the playpen. So I do my own show with you. And if you like the own show with Francie, you hit the like button. But he's going to tell you what he exactly thinks. And he has this tendency inherited from his father that when certain things have been very clearly established, to unestablish them is suffering fools, and he gets agitated. And he shouldn't. He should be nice and kind all the time and diplomatic, but he's rude. It just doesn't, he can't tolerate it. Why? Because he comes across it a lot often. If you keep getting people doing various things and saying the predominant color here is black, as they start talking, Francie straight away interrupts and says, no, it's not black. It's predominantly white. You can't even go there. I won't accept it. You see, this is how your subconscious and your conscious mind works. You sit down in Netflix all relaxed, and they start showing you a black King Arthur. And here's how Francie reacts. He says, oh my God, out loud, what utter horseshit. They are trying to reframe history. And even when other people are wanting to watch, they just say, can you just keep quiet and watch? And I say, no, I refuse. I absolutely goddamn fucking refuse to be fed fucking bullshit. I don't sit there and let people program my brain. You see, the subconscious mind just absorbs. The conscious mind is the crusader with a sword that blocks bullshit from being programmed into the subconscious mind. You think you know better and you say, I know, it's all play along. I'll play along. It's kind of like using other people's pronouns is the equivalent to admitting to speaking to schizophrenics' invisible friend. You play their fucking game. And you know what? You become them. You have to intervene with your goddamn conscious mind, the critical thinking you were given, because you are defending your own subconscious sponge that absorbs things. You see, they bend you slowly. Even if you always knew King Arthur wasn't black, for example, but they keep showing it and they keep doing it, and you sit in delta, theta, mental phase, sleepy on your couch, and you don't shout out loud, block, close, BS, shut it down, horseshit. If you don't, you quietly get programmed, even though you know better. And that's why Francie is the way he is. Because he just shouts immediately, bullshit, bullshit. You can't do that. It's white. I'm not going to play your fantasy game. I'm not going to pretend. I'm not going to pretend in an imaginary world. I'm not going to talk to your fucking imaginary friend. I won't fucking do it. That's how it works, you see. You stop it there, right at source. You grab it by the throat and you close it down. It's rude. It's undignified. It's arrogant. It makes you sound like you know better. And unfortunately, on certain things that I've spent so much time, I do feel I know better. That's why I'm a kind of authority in some ways on some things, because I've done the work. And I don't want to start talking like a grade 5. You see what I just did there? I told you, don't let them program your subconscious mind. Stop bullshit as it comes. If someone in a debate says there's going to be a 40% collapse in gold because there's going to be a major, they're going to cut interest rates super low, what they actually are saying is that there's going to be a wall of money that's going to want to chase bonds. And I have to say, listen, everybody talks the one half of the seesaw. Nobody really wants to say there's a wall of money going to chase bonds. I make them say it, because if they say the rates are going to go so goddamn low, there has to be a wall of money that's going to be happy to chase into bonds. And I make them say the difficult bit they don't want to say, because there's an illusion that the central bankers, they don't always accept that. There's an illusion that central bankers, and I'm so sick and tired of dealing with this. That's why I get curt, rude, and I leave early, because there's an illusion that central bankers set the rates, particularly on the long end, as we're now seeing, and it will be coming to the shorter end soon. Trust me. The central bank can only set a rate once it's already polled the primary dealers. It's tested that there'll be the demand. It's made sure that the bid will be there, and then it has an auction. And when you suddenly start getting really bad auctions on the long end and there's no one buying and all the stock is staying on the shelves because actually that market's not that liquid, and here you come with more pink crops to sell and the people are going, I kind of got 19 pairs in 15 different sizes for the family already, and the cupboard full falling out of my head every time I'm looking for my radio. What tends to happen is the bid isn't there. And what happened on the 2020 September call is the goddamn bond market cycle ended from being a bull. And there's so many people that don't get the repercussions of what that means. And it feels then, when I'm dragged into a debate, that I'm dealing with something people don't understand. It's kind of like having a maths argument with someone who disputes 1 + 3 = 4. You can't go there. There's no point talking differential calculus. You can't goddamn do it. The bond market turned. There is no longer the appetite. It had a 55% crash. 40 years of bull, it's had a 55% crash. The trend has changed. The people that issue new money always have a banking cartel that are owed interest on that money. Every time you gave them that exorbitant privilege, asset, liability, new money, even when they do it on a computer. So many people go, they'll just print. They'll just print. Okay, they'll put digits in the computer. That has to be recorded as somebody's asset. The government gets it to spend, and it is the liability to the banking cartel with an interest rate. Okay, more debt created, money is borrowed into existence. You can't separate the dollar from a debt instrument. But there's so many people, they'll cut. They don't have the power to cut if the market won't buy the other side of the equation. It's a seesaw. You can't have half a seesaw going up or going down. The other side has to go up. That's how it works. So I get frustrated with half seesaw storytellers. And that makes me a very rude, annoying, obnoxious person. And it's been widely acknowledged. I have a big ego. I'm arrogant, rude, and obnoxious. And I'm okay with all of that. It's 100% true. It's 100% goddamn true. I'm sick and tired of baby narratives, Satoshi fairy tales, half a seesaw. There's a whole seesaw, there's not. You're fully pregnant or you're not. You're not half pregnant. That's where we get. This debt market is going up on rates. For there to be rates go down, you can't really have too much of the long end going up while you cut rates go down, because then you're going to get the most vicious steepening. And then it runs from 30 years, 20 years, 10 years, all going up. Soon 5 years start going up, and you end up going, you can't cut anymore. People are pricing in a crisis. There's too much debt. It can't go up in value when there's too much of it. And you're adding to it ever more, ever faster. You see that. And people don't grasp this. And that is why gold is going up. That is why it's unlikely to have a 40% discount. And if you called a 40% discount and it was supposed to drop to 890 and it's now 3,500, you were wrong at that point. And if it's now to get a 40%, it's a much higher value. And it could go to 5, 6, and 7, and 8 and not have delivered at any point 40%. It might only have drawbacks like gold down to 4.7%. We had a carry trade crisis. Gold was the least affected to the downside on negative beta. It dropped 4.7%. 4.7%. I can't tell you in the future that something absolutely can't happen. I can totally be wrong. But in any normal functioning where people are substituting a reserve asset for which there is too much of for one that is rare, unique, fixed, and always can't be printed and manipulated by human beings, you end up with a scenario where everybody goes to safety. That's what treasuries once were. The risk-free rate on the US 10-year. The risk-free rate on the US 10-year, the risk-loaded rate on all durations of American debt, and for that matter, British debt, and for that matter, French debt, and for that matter, everybody else. I get frustrated. Frustrated talking about this. To get a 40% drop in a 25 trillion market cap market, you have to see a whole bunch of people that have all now witnessed, they failed to spot the turn in 2020. But believe you me, they'd all spotted it by 2024 when Druckenmiller, Paul Tudor Jones, and everybody else spotted it. You're now telling me all those people that waded in, got gold bars delivered, sent to the central bank, sent to the big hedge fund manager, sent to the institution. We have now crossed a key line where there are less treasuries than there is gold in Forex reserves in central banks. That is the trend. It's turned. You had peak low gold in the 2000s and peak treasuries forever as reserve assets, and it turned. And it absolutely was confirmed turned in 2020. So what's happening is substitution for long-end debt and debt generally for gold. To get a 40% correction on what is now a 25 trillion market cap, you would need people to show up and sell gold to the tune of 11 to 12 trillion dollars in gold to go and move into, wait for it, treasuries. Treasuries after they've turned, after the rule of law is being walked back. We did a video on Odyssey. None of you saw it. It was with Mr. Titus on the walk back on the rule of law in America. You have the most saturated investment capital market in America. The market caps of its stock market is about 63% of the entire world. You have totally saturated market cap in America. You have over 35% of the treasuries being held by foreigners that they absolutely rely on holding. And you'll watch Brent Johnson video, and in his very first sentence, he says, the dollar going down is no problem. The dollar going up is a problem. And there's nothing international or foreigners can do about the dollar going up. First opening sentence. And I go, wait, what? What? Bullshit. It's straight away bullshit. They hold 35% of your debt. If they really wanted to crash the dollar and your treasury market, you don't even need Russia, India, and South Africa or Brazil. You just need China to sell its treasuries. And not all of it, like a few $100 billion. And you get Trump tariff tantrum, which was Americans selling American assets. First they blamed China, then they went to Japan. The facts showed inside the country of America, they were selling and they were negative, the outlook of their own country. So you have all the capital saturated in the equity markets of America. Yes, foreigners, Swiss National Bank is a hedge fund built on Mag 7. You know it. All of that money is sitting there. You've got 35% of your debt being owned by foreigners. But the big trade is, amazingly, this other capital that's somewhere on the sidelines, nobody knows, is all going to rush into America and chase treasuries, just as they seize through the SWIFT system the Russian money, just as they are moving in the wrong direction on the rule of law, the West, the democracy, the rule of law. They've pivoted and they've turned, just as their bond market has gone into a bear market and lost 55%, which on a risk adjusted for its paltry returns and shit interest rates is a blowout. It is a non-trustworthy asset anymore with that level of downside. You're going to have a wall of money all chasing into America as they are tariffing everybody, declaring fiscal war on everybody, and you're going to have all the asymmetry is on money leaving, and even American money will leave. The stock market is the most overvalued it's been, and the trade is the rush into America even further. No, as their currency debases, as their debt debases, it causes contagion, it reduces the perception of risk, and that is why, my friends, gold is running. Let's show you this France 30-year on a weekly. So, what do you think? We said rates higher. I've listened to a wall of people telling me this was the top in rates and we were going to crash. I've been listening to a wall of them. We've said this is an upside HVF. That's where you are today on France. We did the European debt video ages ago. The debt rates are going up on the 30-year, across the nation. They are even priming you. They're talking about the IMF doing bailouts for France, for Britain, for everybody. Hey, I'll get a bailout. Let's get a bailout. Let's get indebted and get a bailout from the IMF. They've got bottomless pits. Hold on. Is there a bank account called the IMF bank account? No. Where does the IMF get its money from? All those same indebted lepers. So at a time that the UK, which has suddenly become the biggest buyer of US treasuries of the foreigners, that's right, and Belgium, like you trust that. The other thing I get is CPI. We're not having any inflation. In fact, we're below inflation rates. I have to bring a meme out for that one. I mean, it's like, wow, how can we even think that, friends? How can we even think that? There's so many stories. Look at this. Sharing screen with you. Let's check if it shows up. April 02. This is just one anecdote. April 02, 24. August 11, 25. Kirkland store. We're talking about beef, loin, New York steak, boneless USDA choice. Same product, exact same product. 16 months, April to August. This is August of 25. 16 months. I'll do the maths for you in case you don't want to. $10.99 per pound. $15.99 per pound. 16 months, $15.99. There's shadow stats for this. You get, when I talk to someone and he goes, the stats say it's 2%. I'm like, it's like talking to somebody who got vaccinated. And I get frustrated. And I'm rude. I'm just like, no, listen, go. I don't put energy into things where basic principles of clear deception are going down. When you're talking to known liars that lie, that are at the end of an empire that need to lie more than ever, do you ever go, but they told me so? It's true. It's whatever they tell you to tell you is so. By the way, on the vaccination things, you see RFK telling everybody that anybody who was died immediately after the vaccine, which was an absolute huge number, according to the statistics, they were not treated as vaccinated. And everyone who is on their first vaccination that died within 2 weeks of that first vaccination was categorized as unvaccinated because they hadn't had the second booster and the third booster. You see how they masked? Do you see how they masked a cull? If you actually have what you and I would understand as unvaccinated and vaccinated, you would have statistics of people that never had a needle break their skin with that mRNA poison and those that did. And everybody who's been able to do that honestly says one side has horrific outcomes and the others are fine and dandy. You see what they did? They recategorized. The most weak that got the most poisonous shot the first time up are dead. Therefore, they died of CV-19 as unvaccinated. You see what they did about those scamming. He told you how they scam, and they will give you statistics for that. They will give you statistics that guy's just dropped dead of vaccination because it was 2 weeks inside when he got the injection. Liars, frauds, murderers. This is where you're at. If you think you can trust anything statistically that comes out of a mouth of a government institution, I don't feel I need to discuss too much more. I really don't. Go on. Go into your playpen with the KuCoin toy, the buttons that go bing, bing, bing when you hit them, and play. But it's not for me, okay? I'm not on that game. And is that arrogant? You betcha. It's arrogant. I am an arrogant sod. I'm a bastard and I'm rude. If I feel I'm wasting my time, I pull up everything. And I don't let bullshit come through my frontal lobe, and load into my subconscious mind, because I've spent a lifetime depacking a fucking lifetime's worth of bullshit that got hammered in through there when I didn't have a crusader with a sword in front of it. And now I do, and I've unpacked it all, and you ain't messing that room up no more, because bullshit gets blocked at the door. If you start to say something, if you say to me, you don't own the water that falls on the roof of your house, what you're trying to really say, and I unpack it immediately in front, is you are attempting to assert control over a resource that is falling on my property. That's actually what you're saying. And you can fuck off. That's how I deal with it. Right there, right now. And that's how you have to not let fraudulent narratives that are not based in the real world, mess around with you. Don't stand around waiting for multiple calls of 40% crash on the gold market. It won't necessarily serve you. You will reach a point of unobtainium and it can hurt you. You cannot sit and hold government statistics which are proven, and there's sites for this, like John Williams, that will show you that you're in the mid-teens in terms of true inflation on a like-for-like basis. And memes say it best. The debt market is devaluing. It is going up on the long end. How do you get a massive succession to very low single-digit 1% on the short end when the high end is doing that? The debt as a category is being undermined. It's kind of like poisoned pork. You don't get pork cutlets going really cheap because they're poisoned, but everybody pays $1 gazillion for bacon. The whole pig is contaminated. The debt markets are contaminated. The asset category you were sold is caught out. It's over proliferated. It's wrong. There's smaller ones they control for a little bit longer, but we're in the final corner. They've run from every corner and pissed and crapped in their pants. And there's one clean corner left, and it's called the short end. They're trapped in the same room. They've got the absolute runs, and it's coming. Every corner will be wrecked and fouled. That's what happens. That is what gold is. Gold is truth. Gold is truth. And everybody has become globally fascinated by a little spike that may or may not happen on the dollar on the basis of offshore money. And that's the great success of the salesperson for that theory, because it's designed to keep you out of gold. And let me tell you, it will be a lot smaller if it happens a lot later, and it will be a minor hiccup. And you've got to recognize debt debasement is fiat debasement. That's where that inflation on that piece of meat came from. Debasement of currency. And wait till they start squeezing the supply chains and push it up even more. So you've looked at France debt. You've looked at German. Let's have a look at German debt, and then we'll go to gold chart, your favorite, and then I'll have a look at your comments. Halliburton, Canada. That's an interesting name. It's probably a lovely place. Oh, Germany. We just started the week, guys. We are Tuesday of the week. And another green candle for Germany. 3.42, not that very long ago, and you're at 2.2. In December 23, 2.2. December 24, 2.26. Now you're at 3.4, 2.26, 3.4. This is the spine of Europe. All the other nations' real rates are based on the fact that they have a little bit of a premium on Germany because they're not directly Germany, but actually they would all be far higher if there was no Germany, because there's an implied backstop by the big guy in the room. He dies, they're all dead. He dies, they're all dead. That's what happens. So that's Spain, that's Germany. We can have a look at Spain just for the debt markets. The debt markets are out of control. Let's go Portugal, maybe. I don't know my codes on Portugal. Oh, Italy. Ita. Italy on debt markets, trading up 4.7. Let's move my pink line out the way. Had a moon pump over there. We have had a rest. We had a pullback. Upside continuation should be expected, trading 4.66. Let's go gold. Let's go gold, and then we'll have a look at your comments. Now that's the breakout, and it's come, and it's beautiful. 3,503. Happy 3,503 day, not waiting for a discount. This is your discount. That's your discount. Buy here, use Pure Gold link below, use ITM trading below, use Bullion Vault. Say thank you for the updates and keeping you in gold by utilizing the links. Simple as that. I say thank you if you do. You'll pay the same price I do. Nothing on it. 3,503. That's your discount. It's going to 3,761 on balance of probabilities. And I don't assess, while it's not impossible that it could smash down 40%, I do not put it in the high probability case scenario, and I see it counter beneficial. And in the world where it does, I can tell you other things like housing, like debt markets, like share portfolios will be a whole other world of zero or very close there too. Okay. Gold is moving. Gold is moving. Who said that? I'm rude and at times obnoxious. Yes, it happens. Listen. No milkshake. I'm lactose intolerant. Listen, it can happen that you get because of offshore, but nobody has ever explained to me. And I've asked the question. We had him on, Brent, and he's a decent guy, nice to talk to. I poke fun at him on Twitter, but I'll always be polite if I meet him in person. It's actually engaging thought and counterintuitive. It appeals to my counterintuitiveness immensely. All of these things. Okay. And offshore money, there's some argument to it, but there's so many arguments that don't work. And as we said, the Liz Truss moment came for America. Rates up, dollar went down because it was money leaving the country. How much has been funded on the yen? No one can put a number to the yen trade. Now, multiple choice question. Look at me. Multiple choice question. Which one do you go? They can't even tell you how many people have borrowed on the yen. Let's be clear. I borrowed on a property in the UK using yen as a high net worth person at that time. How many people, institutions, hedge funds, like a bit of leverage and would prefer to pay less? Just think. If they can't put a number to it, do you think it's a pretty high number, or it's just something really small, but nobody's cared or bothered, or it's a super low number? Which side are you? Which side are you? Because the low-cost funding from Japan that funded their boom and bust is what's been done exactly in America, following Japan. Just like America follows California, some say. I don't think that's always 100% true. I'm sure the Texans will and the Floridians will disagree. But in the same way, the financial debt-based crash could come. Just saw Chris McIntosh. Love Chris McIntosh. Straight up, doesn't get fooled by fallacies at all easily. He's comparing. So you're not just hearing this from me. He's comparing what could follow the US equity market will be Japan Nikkei market for decades. Such is the hypervaluation. Makes total sense. And it's a thought I've had. And there he goes and says it. Before I've even had time to think about it and discuss it and mention it myself, he's already got there and said it. Chris McIntosh. Follow him. Subscribe to his newsletter. As always, not fooled by fallacies. You don't get to such a hypervaluation. Yes, it can go a tick more, but it's an asymmetric bet. You have 9 gazillion to the downside and not so much to the upside. Asymmetrical bet. Capital will flow away from a collapsing debt nation that is no longer rule of law like it used to be, is reining back everything, going to tax scavenge mode in every single way, and you're seeing corporations and other things bleed away into other parts of the world. I will show you an index you might like. One of many things we talk about in our community. This is the 50, the SSE 50 for China, a macro upside HVF. The Singapore index, we've shown you the Straits Times, all with huge targets that are coming in much cheaper, much cheaper by percentage to GDP, by PE ratio, by market cap to just about anything you care to measure it in. You're looking at worse than .com. It's not a question of if, it's a question of when. And capital, much of it foreign, will leave. They're not going to chase the bond market. They will leave. You will see an inverse capital effect, a massive magnet capital to capital that the NASDAQ, the technology boom, and that consistent will reverse over time. It is obscene how big it's got, and it will take a time for it to unwind. Let's just show you. Global stock markets, 62.2 trillion. China, 11.8. Let me tell you, that pivots. Not overnight. You have a crash though, you have a crisis and a correcting stock market. You are so overly stock market to GDP. The US stock market is now over twice the size of the entire US economy. A lot of that on foreign capital. As you turn your back more and more on the rule of law, as your bond market on the long end is failing more and more, and you're telling me what? A flight of capital is going to come in and buy your bond market so aggressively and dump the gold market that you're going to pay 60% of where it is now. What is the number of 60% of where it is now? And by the way, these kind of predictions go on and on and on, and they're never wrong. They just keep saying it. They keep saying it. It's kind of what I call the David Hunter thing. You can just keep saying it. In an inflationary environment, all stock markets are going to go up. We're going to go into record fiat debasement. But what you want is the actual currency denomination and the stock market to both go up. You don't want the currency denomination to go down even faster than your stock market is going down. The Venezuelan stock market wasn't the best stock market. Neither was the Zimbabwean in real terms. What you need is some currency that, yes, there's a bit of debasement in all fiats, but it's not trading long end 5.5 and getting deeply out of control like the US. So 3,500 times 0.6, 2,100. What do you think is going to happen? You think all the central banks are going to go, oh, can't buy at 2,100, must whale in at 3,500. They're a little bit different to crypto kids, guys. You're talking about being 2.11, 211% bigger than the economy. It's the biggest, fattest bubble. I think Palantir was on about a 450p PE ratio. Now, admittedly, they're going to get thrown all forms of contracts. The opening statement of a recent Capital Cosm milkshake chat with BJ, with Brent Johnson. There's nothing the rest of the world can do that could weaken the dollar. Statement. I can share the video. Hello? How many trillions? Japan, 1 trillion. China, 1 trillion. Other countries, 3.3. Belgium, Luxembourg, oh my goodness. Cayman Islands. Got to keep the Ponzi going quick. Get that. Cayman Islands. What time to hit the bid? Yeah, United Kingdom, 665. This is on 2022 data. This is outdated, by the way. You're telling me a third is held by foreigners. They don't even have to sell 1%. If they sold 1% of their third in just a week, they did like they did on silver. Late Friday afternoon, not-for-profit sale. Let me tell you, you will see those rates spike and you will see that asset collapse. If anybody even thought about doing it. The American debt-based situation is totally reliant on the rest of the nation not wanting America to collapse, not wanting to cause contagion, to try get out of the situation slowly while America's still standing. Quick, prop him up, keep holding. We just want to get out of the room. Hold him up, hold him up, hold him up. The drunkest man, everyone's battling to hold the drunkest man in the pub up so that they can get the hell out before he falls over and splits his head open. Not, oh, there's nothing they could do, nothing any foreign nations could do that could see the dollar go down. Only America decides. That is such copium. That is such American Pax Americano copium about the fact that America is entirely reliant on foreign capital in their stock market and in their bond market, and that if that foreign money reverses for any reason out, it would cause absolute contagion, and they don't want it. They have you by the balls and they don't even want to squeeze it because it doesn't serve them too. But you have to stop the BS at source because it sets a tone. If you just nod and go, yeah, yes, I hear you, yeah, then you just sit there, program my brain with any BS, go right ahead. I'll open the front door in my head, open it up, walk right in, puke all over the place, leave it a mess, and with a whole bunch of false fallacies. Don't do it. Stop it at source. Do it, do it, do it. Never listen to BS. Speak out loud in rejection. Your body understands that. Your conscious mind understands that. And your subconscious mind as an adult understands that and closes the door. Do not get programmed with nonsense, false fallacies. The Fed can't cut rates for an extended period without the support of the bond market getting bought up long term. There can be short moves, but the way the long end is going, it wouldn't shock me. So we have non-farm payrolls this week, and that means live trading with me. Hey, the man in the camo shirt who talks finance. He should be hunting bush pigs, but no, he talks finance too. He's got a side hustle in economics and HVF method. You can join us for a live trading day this Friday. They could stop this rate cut hopium a little bit, which supposedly is the only reason gold's going up, because rates down. They want you to buy the template. It's only when rates are going to go down that gold can go up, because that's when rates are going up. Then they say, no, gold must be sold, all of that. We've shown that gold goes up on rates up. Gold will go up on rates up. Gold will go up on rates sideways. Gold will go up on rates down. You hear what I'm saying? Gold goes up. In this environment, gold goes up. You have continuation patterns sideways for a bit after a blow off up to 3 and a 5 on the Trump tariff tantrum. He gave you too much in too short a time. We dropped down to 2.9. You got $600 just like that. Bang. Of course, you go sideways now for 3 months. That's technical trading. But guess what? The trade hasn't changed. Keep on keeping on. Continuation. Continuar in Spanish. Keep on keeping on. That's how it works. That country right there, with that amount of foreign debt holders, is at the whim of those foreign debt holders. It's only because we're in a new world order anyway, and all the politicians are controlled. If there was real financial war, China would be getting out of that 902. They've got a conditional, and I've floated theories. It's just guesses. It's just pure spitballing and speculation. But by holding on to that and not selling it, the discount window on precious metals that has been manipulated is kept open so that they can make back the profits on what they're losing on those T-bills. Trust me, China knows they're losing on those T-bills. By the way, other news. African nations are pivoting their debt out of dollar, the economic hitman, into yuan. And the Chinese are saying, hey, we've got all these dollars. They don't buy any of our, they buy all of our stuff. We don't buy any of theirs. They're running record trade deficits with China and Europe. Here, we've got all these spare dollars. We'll pay it off and you can refi with us in yuan. You see that? The American hitman that was holding the gun, someone else came along and said, let me hold that for you. And the American man is gone. The power is gone, and China now has the power over resources in that nation. And the new slave boss is a more refined, less aggressive one than the old slave boss. He doesn't start as many wars. That's not a pro-speak for communism in China. I don't really want the era of American hegemony to end in terms of relations and all of that and the kind of people I relate to. But I can tell you, we blew it. In America, we blew it. We let the parasites in and they ran a Ponzi scheme until it broke. And this is how it breaks. Through stages, right here, right now. Debt is going up. Debt is going up. Let's see some of your comments. My amateur armchair analysis is family cartels that have intelligence apparatus to honeypot elected officials and a mechanism to stop the internal Gini coefficient. That sounds pretty accurate. Greetings from Hong Kong, Brandon. 3% of GDP was supposed to be, I missed that comment, it went past so quickly. Hit the like buttons if you're having fun. You're 931 of you are watching. Let's get 1,000. Flight to safety doesn't care for rates. Flight to safety runs to gold. When the currency loses every day, gold and silver teeth in such a barbaric tribe. You crushed that debate. Luxembourg here. Yeah. So it's frustrating. It's frustrating to hear. But the stats say 2%. There isn't inflation. There is inflation. Shadow stats shows it. Known liars lie, and they're lying to you. The notion that the Fed sets interest rates, another fallacy. They don't. They can't if there's no demand. They often have conversations about what's the level of demand, how much have we got out there, how much can we get out. There's communication that takes place. They don't just show up on random and throw 100 billion into the air. We need someone to buy all this, otherwise they would have failure. And they're still getting failures, even with a bit of pre-planning. That's how auctions work. And they're getting all those failures on the long end, and they want cheaper rates. So they're running down the short end. Here's how it works. Let's show you the long end and the short end. Let's get another chart of some interest. This is Luke Groman, by the way, another good analyst. Goldman's report, total federal debt, 90% in blue. So that's the total debt. Total foreign holdings of UST in green. Now tell me if you notice a rate of ascent that might be different in any of this. Rate of ascent. Rate of ascent. That's foreign holdings. Foreigners don't want shit paper. There's not much more to say. Not when gold's an option as well. And it does what it's doing. Unless it's a slave nation that's going to get buried with the pharaoh, like the United Kingdom, like Japan, and potentially like Belgium and Cayman Islands hedge funds, for example. Mind the gap. Rest of the world treasury securities. So this is going down. The red line is actually going down. I'm trying to see the difference. Federal debt held by international investors is the green, and rest of the world. I don't know what the difference is. Rest of the world treasury securities held by foreign official institutions. Oh, okay, official institutions. Official institutions are actually not accumulating. That might also be the value that's dropped as well, might be reflected in that. But that clearly is a big old gap. A big old gap. Give Luke a follow. And he's pretty much on the money. Mind the gap. Mind the gap. There you go. Mind the gap. What does that tell you? What does that tell you? People don't want it anymore. These rates are going to climb a lot higher. People are letting it happen on the slow. Wait till everybody says they're not intervening. The rates just keep going up. We should get out of ours. It's not getting very good. It's going to go into contagion. Then you get contagion. That's how you get contagion. Don't forget, there's a link in the show notes. Book a call. You too can be part of the Market Sniper community in reset times where we debunk narratives. We keep you out of false premises, awaiting a little flurry of a fiat that may or may not come to the upside based off offshore debt. Well, what about all the offshore debt that has to go back to Japan? How deep is that valley? How much money needs to go back there? You'd have to sell dollars and buy yen. Oh my goodness. What about so many other things that could go wrong? What about the fact that the rates went up and the dollar went down because all the parasites with the American assets now want to move it to Dubai, Singapore, someplace else? What happens then? What happens then? That's what people are not talking about. If America was a family household, by the way, this is Hedgeye. Give credit to everyone, all these slides. None of these are mine, Hedgeye. If you were a family in the USA, 46.8 annual income, you're on 46 grand, call it 47 grand a year. Just your expenditures are 64.7. You then run a credit card on entertainment and other things to the tune of 17.9. And you have an existing debt of 345,000. So you're adding to that debt. over here. 18 plus 65. 18 plus 65. And you make 47. Let's just make the numbers simple for you. Real simple, like. That is 65 plus 20. It's 83. 83 minus 47. You're adding to it by about 36K a year. A fresh 36K a year is going on top of 350,000. And the interest rates now on this credit card are going up. They're going up on all the long debt that you have. They're going up on all the medium debt you have. And now only your short-term financing is cheap. And now you're moving it all onto the short-term end. How does it end? Debt-based collapse. What does that mean? The currency devalues in accordance with the debt. They are born of together. One. Siamese twins. That's the bit so few people get. That's the bit so few people get in debates. You can't have major debt debasement without some element, the same proportional element of long time. This is what's happening in long-term bonds. Here's all the colors. We've shown you most of these. GBP 30. How does that end? It gets higher. It gets higher. What does that do to gold? Gold goes up. It's an inflationary and a recessionary environment. That makes for stagflation. This is not a point I battle getting through to people. They think you can't be both at the one same time. It's kind of like you can have global warming and you can have global dimming. Someone could be throwing a lot of pollutants in the sky, for example, but the ozone layer has been thinned by something else. You could actually be warming the planet and throwing up things in the air that reflect light away to try counter it. That's what they're doing, apparently. Okay, so you can have inflation and deflation. The consumer is facing higher prices. The consumer is facing higher prices. And at the same time, the economy is growing less and less. You have both. You have increasing prices here, and you have reducing jobs. More firing, less hiring, contraction. But because of the inflation, the GDP number comes out the same. Everything is good, they all tell you. Because everything costs 30% more. So the fact that the economy is contracted by 30%, it looks like it's the same. Flat growth. No. Stagnation. Stagnation for the masses. Hyper stagnation. Which is why we coined the phrase hyper-stagflation with a FL, because you are experiencing inflation simultaneous to a decreasing economic go-forward economy. That's what's happening. You lose on both ends. It's the polar opposite of the Goldilocks economy that Greenspan gave you. That's right. Enjoy now, pay later. This is the bit where you pay, bitches. Yep. That's how it works. Embrace the truth, accept the truth. Do not tolerate misnomers, misrepresentations. The inflation rate is not 2%. They are 100% lying to you more than they've ever lied to you. They're doing, this is the other thing, they're doing 32% estimation where previously it was 10. They are reshuffling what goes into the box, what goes into the compartment, the shopping trolley. They can keep cheating. You can just go look. Someone else is doing it for you. Someone very kind. Grant Williams, Shadow Stats. Same goods, same items as good old Ronald Reagan era, 1982. How much is it up? Year on year. It's up immensely. And that means the GDP is falsely up. They're selling you growth, which is all inflation. It's all increases in your cost of living. GDP is a phony number. The more they destroy currency, the more they're going to tell you it's growth. Zimbabweans were billionaires and they were spending a few million a day, but they never lived so poorly in their goddamn life. Do you get it? Do you understand? These guys are Ponzi tricking you, a standard, generational, typical tertiary extracting, Sabbatean Francus mercantilist trick. And I don't want to debate with people who don't understand that, because it just gets frustrating and I look rude. And I am rude. And I do think I know better. And sometimes I'll be wrong, but I'll be very sure about the things where I think I know better. I will have studied them a long, long time in principle before I get rude. Some things I'm still trying to work out, and then I listen carefully and I'm real polite. It's how it is. I just don't want to have 5-year-old discussions in debates. Okay. Bitcoin fixes this. Okay, yeah, that's fun. We used to be rich when we had a million in the bank. That amount is barely middle class. It's true. $1 million is not rich, guys. It really isn't rich. They will burn that. I mean, we need the house property market to really collapse a lot, and a lot of things to go very disinflationary before $1 million starts to mean things. Stable coin will save us. That's the other thing, everyone. The stable coin, the new plan. The new plan is stable coin. The new plan, stable coin will buy all our treasuries. Stable coin is buying a very small percent of treasuries. Stablecoin needs to get exceedingly big. And by the way, everyone says, but this proves that the dollar is winning because 95% of whatever is stablecoin is the dollar. Well, they'll be coming October. They'll launch a euro. They'll launch a yuan. Everyone will launch their own. They're not going to go with CIA coin. You can trust me on that. The Chinese won't. The Europeans are not excited about it. That's one of the reasons why they've been so anti-crypto, because of the sneaky dollar stablecoin element into it. They want to watch their own farm. They're all going to release their own, and some of them will make it mandatory. They're socialists. They're commies. They'll say, we pay in euro coin, and you'll be paid it. It'll start getting used very quickly. It'll go from 0 to 30%, and all Europeans will run on it. And then they'll want to send it to you when they're buying a good. Are you going to say, no, I won't take it. I won't take it. I only deal in dollar shit coins, not euro shit coins. And they're all devaluing, and they're all shit, and they all run on the same rails, and they all do the same thing. No, you'll take it. You'll take it and you'll turn it into gold ounces because you're smart. You watch this channel. You're not waiting for the 40% discount. I'm mean. I'm mean because I take my fights to the streets always. They're all good people. All these people that I mentioned, or not even mentioned, are good people. They actually mean well. They kinder people. They politer people. They're less belligerent people. They give more time for other people to talk bullshit people. I don't. I jump in and start swinging my baseball bat. I say garbage bullshit. The guy in the debate meant well. Yes, he did. And he's a good person. They're all good people. They're all good people. They're all good people. I'm mean. But I don't want to listen to stuff I've already disproved. Imagine every conversation you started, you first had to convince the person you speak to that 1 + 1 = 2. That's how it feels to me. Are we going back there? Okay, well, we can't build on anything mathematical if you have to go back there. You can't build on it. You have to understand the system. You have to understand the system. You have to understand they can't just print. They create digits, and that's a liability and an asset. And someone owns the liability and somebody owns the asset. And one of them is getting paid interest, which is going to increase how much you need to pay in interest. And that's why you're in a parabola, because the more the interest rate goes up, the more you have to borrow to pay interest, which means the more the interest rate goes up. And the more the bond market sees the interest rate going up, the more you need to borrow to pay it, and the more it starts pricing in the fact that you can't pay it to ensure that you end up not being able to pay it. That's how it ends. It's kind of, so there's a Ferguson effect. Niall Ferguson. No, is it Niall Ferguson? There's a Ferguson effect. The Ferguson effect says the minute, it's a simple equation, the minute your interest payment surpasses your cost on defense, so it acknowledges the role of might, and it says the minute your interest payment is beyond what you spend on asserting your borders and your might, you are gone. That's the Ferguson rule. It's simple. It's a nice simple rule. Go schmoogle it, or DuckDuckGo, or one of those parasitic search engines that are capturing your data. Go find it. and it's over. And we're at about 130% GDP. That's without pre-committed. Everyone goes, but Japan's worse, but Euro's sick. It doesn't matter that it's synchronized. You're standing on the top of the mountain and you're taking a dive. They're on 3-step ladders. America sold debt and dollars in lieu of product and services from the rest of the world. That's what it did. It was the fat kid on the lounger ordering burgers and beers at the Forever Resort, lounging by the pool, and a girls for the back massage and a happy endings, and kept putting it on its tab and issuing IOU notes. That's it. And then suddenly we're at the moment where the hotel manager comes and says, fat boy, time to pay your bill. And it's panic stations. It's panic stations because you went for a 1-week holiday and you've been there now 40 years. And it's a real big bill and you're old and you're not so good at fighting anymore. That's where we are. Remember common core maths. Sounds like common law maths. Belief in fiction is saving. Truth is Walmart and Sam's Club can supply 90% and more of the regular people for all needs. We are well into Fergie time. Definitely, you're into Fergie time. It's injury time upon injury time. Use Brave to search. I second that. So what is it about when Trump went around the world making those deals with different countries? Saudi Arabia greeted him like a king. Okay, so he's part of the cult. Saudi, Israel, and America. They are pretend frenemies, Saudi, UAE with Israel, but they're all in on the Greater Israel Project. Of course he's a king, because he's a Zionist and he's advancing the agenda for all of them. That's why. That's why he's popular. He will be bringing, and things are being transferred to Saudi. Saudi are getting Elon's companies, Neuralink, you know, the light on law side. They'll have some criminal who'll get a brain chip as first experiment in good old UAE, Saudi, Dubai area. Of course they will. They'll have less laws and paperwork that need signing. Don't forget, you tortured all your war captors, prisoners of war there, because you didn't have to worry about the legal repercussions of no human rights. Just go to a country where they buried pregnant teenage girls up to their heads and stoned them to death, whether they were raped or just happened to be unlucky. Go there. The bone saw guy. The bone saw guy who deals with journalists in one of his own embassies in another country like Turkey. Yeah, don't forget, Turkey, fork in the chain. 1666, Zabbatai Zevi, converted and then ended up overthrowing the Sultan in many generations later. Then the Young Turks, Atatürk, and all of that. Part of the same club, acting frenemy. You need to understand how the world works. There's more of them around. Many of them are wearing wolf's clothes, pretending to be something different. Even evangelicals are doing their work with their blind belief that they're inferior to a chosen one. Energy fitness, we agree. I just believe that he can be more forgiving as an adult if the other clearly party does not have a dark agenda. I am totally forgiving. I love everybody. I just don't tolerate wasting time on base level things. Chart on PAAS, please. So the miners are looking good. The miners are looking good. Oh, look at that gold. 3,511.40. Put your hands up if you're feeling good about that. If you hit the like 3 times, no, that'll unlike. Hit it once. Once will do. You will get 3,530. Maybe today. Who knows? That's our first rest point, by the way. Our first mini rest point. Every day is green. By the way, this is when we started to turn. We got our community in here. We came out and told you here as you were taking out there. You missed the early bit. You missed the early bit, but you're still in and you're still making shekels, I hope. Green candle. Very small red. Green, 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 green. And we're still going to run the this first interim level. which is 3528.95, before we might take a rest. It's quite close to the second, which is 3565. So maybe we get a bit of follow through, and then payrolls, we get a bit of pushback, bit of uncertainty, or baked in a little bit the interest rate cut. And then we're going to have open territory once we're 3564 for the 3761. So that's it. Gold looking good. PAAS. What about silver? We've got to go silver, and then we'll go PAAS. Here to serve. Here to serve. Beautiful. 40.73. So we did the upside draw for you, and we said, hold on a minute. There's a structure here. So this was the other reason that gave us additional confidence that there was probably going to be a good run, is that silver was in a setup, and it was always generally performing on its setups. So this suggests we might get a rest at the 41.2627, which we told you already before. We also, I remember this in the community because we had a beautiful flag pullback to the funnel. Tell me HVF method isn't awesome. Look at that triggering event. Smash, continuation to the upside. Many would have said, but rising wedge. Inside the structure of an HVF, squeezing higher can take many different forms. You will learn and understand. Then a surge through to the second interim. When did you rest? When did you pull back? Coincidence. Just a coincidence. Now we're moving further, and we're up here. I think we could have a bit of a rest on silver at 41.27. Let me be clear on the numbers. So PAAS was the question, and we took the long way around because some people wanted to know what silver's doing. The rude man will tell you. The belligerent, mean man. The impatient, know-it-all, big ego. He's a big ego man. Never gave the other guy a chance to talk. I do this all in entertainment and fun. It's interesting. It's psychology. It's people's reactions. Everybody is good. There's all good people. Everybody I might be inferring to are very decent souls. I don't think there's anyone who's inherently trying to mislead you. But I do, if I feel it is having a misleading effect, even if it is not of intention, I try to come down real hard on it. That is PAS 172. This is a big setup. This is, I mean, it's a beauty. We love this equity, by the way. We've been talking about it for a while. Yeah, you're right. I was interrupting. Says backyard groceries. He's right. But it's important, if people want to say rate cuts, I want them to say bond buying, to show that they understand. They don't just think it's the Fed that's going to just be able to magically do that for you just by decree. Those things don't happen by decree. You have to say there's going to be accept and acknowledge and tell me then that you're saying the debt markets are going to go up in value, because otherwise it's a way we lie. It's a half seesaw statement. And they find it harder to say that. That's easier to say. You see, there's like a nuance. You don't own the water on your roof. What I'm actually saying is I'm looking for a way to assert ownership over your water. They don't say that. They just say you don't own it, which now means you being dispossessed. Why do they want to dispossess you? Because they want to seize possession of. And in the same way with the bond market. If you think rates are just going to be cut, show that you understand that there's going to be a wall of money that's going to chase into bonds. And then I'm going to say, why? The 40-year bull market is over. Do you acknowledge that? Why? It can have small moves. You saw the rates, how it's gone up, and there have been periods where the rates came off, but that's all normal. That's not a crash right down. It's just a minor move. So that's 172.67. Absolutely love it, and it's a ripper. And that's a long way away from 34.59. So let's be clear. We've been talking about this. This was a just-in-time entry for us at $24. It's only $10 up. Yet I'm still asserting to you that this will have, in percentage terms from its current price, the only thing that's my great concern is you've got to have certificates. 395%. So that is 5 times, basically. 5 times from 35 to 173. And I will also highlight that this is the first in the new trend. I wouldn't even close it at 5x. I would take some profits, expect a pullback, and hold half the position potentially. That's PAAS. So there you go. You've got a target. Now, the tariffs are still being priced in. In fact, Powell actually said we are seeing the effects of tariffs in inflation and the likely growing trajectory thereof, and then still said he would be broadly supportive of a cut. So how do you say the two things? Well, what is admitting is that you have inflation and it's growing, but at the same time you have an economy that's contracting that needs help. And he's been bent to be seen to help the people, which means strong on inflation. That's what hyper-stagflation is. The environment where both exist, both aspects are in existence. You had a Goldilocks economy. Salaries were going up, property was going up, everything was going up, but interest rates were real low. There was an absolute boom. There was mass affluence. Everyone was getting into buy to let. You just had to buy. 2 years later, it was up 15, 20%. It was just, hey, this was easy. No inflation. Your clothes got almost cheaper. Well, there was inflation because there was money proliferation. But in terms of CPI cost at the till for your food, as we globalized and as your clothing got made in China instead of downtown Italy or France, everything kept pricing pretty low and pretty flat at pretty low inflation rates. It was masked. We want more Gary videos. I thought we buried Gary. I thought we buried him good and proper. And then everyone else started to bury him. And then it was like, okay, I don't need to pile in with everyone else. We were there first. We wanted to bury Gary. And then everyone else came to bury Gary. So then we said, okay, we'll leave him to bury. We'll leave them now. They're all piling in. It's no longer new. So Gary was the guy who wants more Marxism, more super tax on people that earn. But on assets, he says, on assets. Not income, but on assets. Okay, excellent, guys. So a lot of data this week. It's an important week. You'll have the non-farm payrolls coming on Friday. As I say, sorry for being rude and belligerent to those lovely people that have to have me snappy at them. And they are good people that mean well. But I'm very assertive about my position. I doubt that you're seeing a 40% cut in gold. I very much doubt it, because where's the money going? And this is the final reserve asset in an environment where the reserve assets are all collapsing around it, all the others. And you have a super high price stock market that has more risk to the downside than the upside. So everyone should go to capital preservation. And the one thing that the BRICS have decided, and most other nations, and now it seems Trump too, is gold is that. And you can't hide on the short end forever. For every 30-year cycle, you put a debt out, you don't have to worry about it for 30 years. You just pay the interest. You start moving your borrowing from 30-year to 10 to 5 to 2. For every 30-year debt lump that you get back, that you put out on a 1 year, you've got to go 30 times around and do it 30 times to do what you used to do once and pay the interest at the same time, just so that you get a cheaper rate. And you've got more coming all the time. The volume, the wheels, the smaller the wheel, the faster it spins. The faster the rollovers come back, and the more the increased parabolic debt and the interest payments keep crushing you out. And we are borrowing to pay interest payments. It's a collapse. So in a debt-based collapse where debt ceases to be the asset, the most indebted nation, which if you took welfare, Medicaid, and everything else, the US would be much more than Japan, and the hegemon who exported dollars will collapse. And in the long run, the debt collapse drags the currency into a collapse. and whether you have a structural moment where offshore people are thin, and I've already given you an example what some African nations that are indebted in dollars are doing, they just refi. And don't forget, the dollar's going down in this environment. It's getting easier to pay. Can I tell you, I bought a property in South Africa and I was waiting for the rand to fall to 20. Nice part of Cape Town. I wanted the rand to fall. I was waiting up top here. Will it come back up? What's actually happened is it's strengthening. It actually came back down to 17. So I ended up doing the transaction not nearly as bad, higher level as I wanted. I wanted it to be bad. I had dollars. I wanted dollar to moon against it. Wasn't ready to do it. And in fact, if I show you something, you might even appreciate this. There's a HVF draw that we did. This is an emerging, they call it emerging, I don't know why, it's been around for a long time, currency that made that target of 19.8 when it broke 8.6 over here. And what happens after we make a macro HVF target? We pull back. You literally made that target just, you kissed it one more time, and we're pulling back. It's been trapped in here. You could have been paid 10, 8, 9%. Georgian lira, the exact same. We're earning 13, 14, 15%, and it's appreciating year on year, on full year against the dollar. Was 3 to the dollar, now 2.8. Appreciated and made 15%. In dollar terms, that's gains. But do you want to do that? Or would you rather have owned the gold that made 60%? And it's going to do another 60% and another potentially on that. Well, I know where I stand. So in the world of fiats, it's relativity. Gold is the king. But in currencies, the dollar is weak and it's staying weak. For it to revert hard, it needs inflows of capital when it's already saturated with foreign capital. And it's moving in the wrong direction with it. Its debt markets is a bad investment. Its stock market is the most expensive it's ever been. And its housing market is awaiting a crash. What's the reason to send new money from offshore into America? An expensive, a hyper world record expensive stock market, the collapsing bond market, or the housing market? Which one do you want? Well, me? No likey either. No, thank you. No mas. No mas. Okay. It's been great fun checking out with you guys. 986 of it. We're going to continue to be belligerent little assholes. We're going to continue to fight for what we think is the truth. We're going to continue to be passionate and angry and rude, but we love everybody. They're all doing their best. At our level, there's no one, I think, that is nefarious an actor. And yeah, that's what you'll get. You'll get some entertainment at times, and you'll get some views. And hopefully, that's all we can do. Till next time, catch you later. Gold is your friend. The links are below. Join our community. Link is below. Book a call. You know what to do. Silver, very good. Gold, very good. Platinum is stirring as well. We'll talk on that more next time. Bye for now.